Right friends, welcome back to second module. Look at this question. What do you know about the recent amendments to Negotiable Instruments Act? This Negotiable Instruments Act pertained to 1881. The financial instruments like a check, a promissory note are mentioned in this Negotiable Instruments Act. And recently government has made certain amendments to Negotiable Instruments Act basically pertaining to checks, check bounce cases. I will take up with one example. I have issued check in Bengaluru and my friend deposited in Delhi. I have issued a check in Bengaluru and my branch is situated in Bengaluru. So when I am issuing check, I am drawer. My bank at Bengaluru is the drawee branch. And my friend at Delhi deposited the check in Delhi. But unfortunately, the check got bounced. I have given check for 1 lakh rupees, but in my account only 10,000 is there. Under these circumstances, check got bounced. Then, as per previous act, my friend has to file case at Bengaluru. If check gets bounced, my friend in previous days had to file case in Bengaluru, but with the amendments to Negotiable Instruments Act, he can file check bounce case at Delhi. So, what I mean to convey is, as per this amendments to Negotiable Instruments Act, check bounce cases can be filed at the place where the check is presented for clearance. In good olden days, they were required to file the case where the branch of the drawer is situated. In a nutshell, in good olden days, they were required to file the case in Bengaluru, but now they can file the case at Delhi. So, as per these amendments, the check bounce cases can be filed at the place where the check is presented for clearance. Look into the next one. What do you know about the Regional Rural Banks Amendment Act 2015? Regional rural banks were established in the year 1975 and recently government brought amendments to Regional Rural Banks Act, and two important points you have to tell. One is previously authorized capital was rupees 5 crores. What is authorized capital? Authorized capital is the capital which any company can go up to. That means the maximum limit a company can raise the capital. Previously, as per Regional Rural Banks Act of 1976, the authorized capital was 5 crores and now it is increased to 2000 crores of rupees. That is one major change. Second important point is previously the share was 50, 15, 35. All of you are well aware. But now that stipulation has gone, but the combined share of bank, or you can say the parent bank as well as central government, should not fall below 51%. The second major change is the combined share of central government as well as the parent bank should not fall below 51% in regional rural banks. So, these two changes were brought. These are the main changes. What do you understand by unsecured loan? Whenever I go to bank, banks will ask about where is the collateral security. Without collateral security, normally banks do not grant loans. They normally go for collateral security. That means if I fail to pay back, then some property will be available for banks for selling it so as to recover their loans. But unsecured loans means there will not be any collateral security and interest rates will be very high. In unsecured loans, interest rates will be very high. For secured loans, interest rates will be less. Because of the reason, if I fail to pay, then they will have some collateral property. That's why the interest rate in secured loans is less. But interest rates in unsecured loans are high, and the examples of unsecured loans are personal loans, credit card advances. These are examples of unsecured loans, and the interest rates on personal loans, credit card advances are high in comparison to other loans. This way you can answer. You have taken loan from Bank of Baroda for servicing the loan. What is servicing of loan? Servicing of loan is once I have taken loan, I have to start paying back from next month onwards. I have taken some home loan. I have to pay back every month. That is EMI. Paying back every month, the process is called servicing of loan. So, for servicing of loan, do you give post-dated checks or ECS mandate? In good olden days, post-dated checks used to be given. Post-dated checks means one check is dated 1st of February 2016, the second check 1st of March 2016, 1st of April 2016, 1st of May 2016, like that. Around 12 or 18 checks were given in good olden days when you are taking loans. But now situation changed. You have to give just electronic clearing service mandate. So, by giving electronic clearing service mandate, your money will be deducted every month on the specified date. You need not give checks. I will give only ECS mandate, and every month on the designated date that money will be deducted. So, this process is called ECS debit. And another thing I would like to tell you, that is, when you are getting salary regularly from your company on 1st of every month, that is ECS credit. There is difference between ECS credit and ECS debit. ECS credit is you are getting salary every month, then your account will be ECS credit. And if something is deducted or something is going away from your account every month regularly, that is ECS debit. So, when you are paying house loan EMI regularly by giving ECS mandate, that is called ECS debit. So, the post-dated checks is outdated scenario, and now everyone gives ECS mandate. What do you understand by JAM? JAM is Jan Dhan Yojana bank account. All of you are well aware about the PMJDY. A is Aadhaar, M is mobile. The integration of these three is JAM. By integrating Jan Dhan Yojana bank account, Aadhaar number, and then mobile number, leakages can be plugged. In direct benefit transfer for subsidy given by government, leakages can be curbed. That is one aspect. Second thing is, it is very easy for the other institutions to track your financial record, and not only that, credit appraisal system while giving loans for the banks will also become very easy with the integration of these type of things. So, this Jan Dhan Yojana bank account, please don't forget, 20 crore accounts were opened under Jan Dhan Yojana bank account, that is PMJDY. India has got around 90 crore mobile phones, and at the same time 92 crore Aadhaar cards were given. So, integration of all these three will facilitate government for direct benefit transfer to the citizens by plugging the leakages. That is the best advantage government will get with the JAM. Look into the next one. What do you understand by Deepak Mohanty committee recommendations on medium-term financial inclusion? This committee was formulated by Reserve Bank of India. Deepak Mohanty is Executive Director of Reserve Bank of India. This committee was formulated. This committee gave recommendations, and several revolutionary recommendations were given by this committee. This committee recommended for removing interest subvention for agriculture loans. If farmer is taking agriculture loan, he is getting a loan at 7%, but government is paying 2% interest subsidy to the banks, that is interest subvention. Deepak Mohanty committee recommended that this interest subvention should be dispensed with. Second important point as recommended by Deepak Mohanty committee is Sukanya Shiksha, to link bank account of girl child with education. Third one is for MSMEs, unique identification of MSMEs. Like that, they have given several recommendations. You can go through my lecture part so as to learn more about this Deepak Mohanty committee recommendations. What do you know about Pradhan Mantri Mudra Yojana? As per MSME Act of 2006, there is differentiation between micro, small and medium enterprises. I have deliberated in my lecture, please go through it. And micro enterprises are very small enterprises, and there are around 5.77 crore micro enterprises in this country, and getting bank loan is very difficult. For that purpose, this Pradhan Mantri Mudra Yojana is started basically to give loans to micro and small enterprises. And here loans varying from 50,000, 5 lakhs up to 10 lakhs are given by banks. And Pradhan Mantri Mudra Yojana, or you can say Mudra Bank, will refinance to that extent. That means bank, let us assume State Bank of India is giving loan to micro enterprise, and to that extent this Mudra Bank will give refinance to bank. That is the main purpose of Pradhan Mantri Mudra Yojana. What do you understand by alternate delivery channels? In good olden days, we used to go to bank for our banking needs. Nowadays, we need not go to bank. We have several other channels. ATM is one channel. POS terminal, you can purchase something in a shop by swiping the card. You can do mobile banking for transferring money. You can do internet banking for transferring money. Nowadays, you need not go to the bank. So, all these are called alternate delivery channels. Right? So, differentiate between universal banks and differentiated banks. As on date, whatever commercial bank we have, they are all universal banks. They will do all sorts of operations. Starting from giving micro loan to a micro enterprise, 50,000 loan to micro enterprise, to rupees 1,000 crore loan to Tata Group. That means from small loan to big loans. Giving loans to agriculture, small enterprises, all these things are being done by the existing banks. So that's why all the banks are called universal banks. But Reserve Bank of India has for the first time brought the concept of differentiated banks like payment banks, small finance banks. The main purpose of payment banks is they will be into the remittances. They will not give any loans. They will just transfer money. They will be into remittances. If you look at the small finance banks, their core activity is giving small value loans. So, in principle approval is given by Reserve Bank of India for payment banks as well as small finance banks. So, these are examples of differentiated banks. This is for the first time Reserve Bank of India has given in principle approval for differentiated banks. Right friends, look at the last question. Do you open account in public sector bank or private sector bank? Definitely you have to answer that I will open account in public sector bank, but at the same time you have to tell what are the advantages of public sector banks? What are the disadvantages of public sector banks? You have to tell public sector banks basically serving the society. They have opened maximum percentage of Pradhan Mantri Jan Dhan Yojana account. They are into rural areas. They are serving the hinterland of the country. They are giving small loans, micro loans. But the negative side of public sector banks is there is a scope for improving customer service. There is a scope for improving the technological upgradation in the form of internet banking and other alternate delivery channels. But if someone asks you whether you go with public sector bank or private sector bank, you tell I will prefer public sector bank, and At the same time, please don't forget, the minimum balance prescribed for public sector banks is very much less in comparison to the minimum balance prescribed for private sector banks. If you look at ICICI Bank, they will keep minimum balance of 5,000 or so. But if you look at the State Bank of India, you can open bank account with 500 rupees or maybe 1,000 rupees. I am not talking about Pradhan Mantri Jan Dhan Yojana accounts. So, the minimum balance is very less for public sector banks. That's why they are able to reach rural hinterland. So, for financial inclusion, public sector banks are doing excellent service, nobody can deny that, but at the same time, there are shortfalls or shortcomings of public sector banks. When a question is asked to differentiate between public sector banks and private sector banks, please put forth the positive and negative aspects of both the financial institutions. Right friends, let us conclude here. Please do join for third module. Have a nice day. Thank you.